So big news, on September 18th, the Federal Reserve cut interest rates by 50 basis points. That's 0.5%. And that is the first interest rate cut that they've done in almost 4 years. This sounds like great news if you're in the market for a home. Not quite. Mortgage rates are still very far from being affordable. So what is really happening here? I'm Terrell Higgins, your real estate and personal finance nerd, and today we're going to be breaking down the relationship between the 30-year mortgage and the federal funds rate. And spoiler alert, it's way more complicated than it seems. Let's get into it. So on September 18th, the Fed dropped the federal funds rate between 4.75 and 5%. And they intend to cut rates another 50 basis points by the end of the year. And their overall goal is to get inflation down to a target of 2%. And all of this sounds promising, but even if these rate cuts continue, mortgage rates won't instantly become affordable. In fact, it'll likely be years before we actually see mortgage rates drop significantly. So what does all this mean for you? So a lot of analysts are projecting that by the end of 2026, the federal funds rate will be hovering right around 2.9%. And if history repeats itself, that means that mortgage rates will be hovering right around 4.5 to 5 something percent, which is much better than what we have today, but is a far cry from those rock bottom rates that we were seeing in 2020. So let's talk affordability. So the average price of a home in the United States is $440,000. So if you put a 20% down payment on that home, that's $88,000. And your mortgage payment after taxes and insurance will be right around $2,785. That is very expensive. So the average household income is $80,610. And you want your housing expenses to be about 25% of that salary. And that number is $1,680 per month. If we compare these two numbers of the average household income and the average price of a home, there is a huge gap between what we can afford and what the market is giving to us. So how low will rates have to go to make homes affordable again? We're talking 2.7%. Yep, we are flirting with the historical lows that we were seeing in 2020. And it is not likely that we will ever see those lows ever again.
Oh, no.
When we saw those historical lows, the Fed was targeting a federal funds rate that was near 0%. It was a 0.09% federal funds rate for years and years to create that perfect storm and get those 30-year mortgages that low. And even if mortgage rates drop that low, there's still the challenge of saving these hefty down payments. $88,000 is not something that's attainable for most households. So if you use a first-time homebuyers program like FHA and you put 3.5% down on a home, it will actually cause your monthly payments on that home to go way up. Your payments will be above $3,500 a month. And this is way more than 50% of your take-home salary and will put you in a very tight financial position. So here's the harsh reality with home prices in the US. So even if we get toward the end of 2026 and 30-year mortgage rates are right around 4.9%, if you're only putting that 3.5% down, your monthly mortgage payment is still going to be around $3,100 a month. And most people cannot afford that much. So unless you have significant savings and you can put more than 20% down, or you're targeting a home that is well below the median home price, it's going to be very difficult to afford homes over the next several years. And unless something structurally changes in the housing market and housing prices drop, affordability is not around the corner. And in fact, once interest rates start dropping, the demand for home prices is going to start to climb. And we're already running at a deficit of over 3 million homes across the US. So this supply-demand dynamic is actually going to cause the home prices to continue to climb. And homes are just going to become more and more unaffordable. I know my wife and we have multiple properties, and all of them are significantly below the median home price of $440,000. And if you're curious what all the math is behind renting versus buying and what the best choice for you and your family actually is, I actually did an entire video on this topic. Thanks for tuning in, and I'll catch you next time.